Hey there traders, David here of TradingFibs and MarketFi.com to bring you a current inside in-depth look at the trading the trend strategy for the Dow 30 stocks. My trading mantra of know one thing and know well rings true for all markets. Whether you trade the futures, Forex, ETFs, or any other market, my plan will keep you disciplined. These videos are for educational purposes only, to support your knowledge in the market and see what is going through my head on any given trading day, or in this particular session, what is going on with the Dow and where we headed. Back in March 6th around, I posted an article here at seeitmarket.com. In the past, I've done some videos recapping the Dow and both the futures, ETF, and look at the individual stocks. Here we see an article that I had posted on state of the Dow, the E-mini Dow. Here we could see a daily chart on using the Heikin-Ashi bars that we were in a pretty much strong uptrend, and as many of you know, last week in the market had some serious sell-off. As we do have, looking up above here, we have a serious gap sitting on a U.S. trading hours down here at actually 17,295. So, do open gaps get closed? Absolutely. Can it take a year? Sure can. So when that happens, no idea. But let's go ahead and jump right in and take a look at where we sit on the diamonds. As you can see, let's go ahead and change that. Actually, DIA had that at a YM. Okay, again, they're going to look very similar. Here we have in the upper left-hand corner a 24-hour chart with a Fibonacci setup at a line 181.32. As you can see, we have hit that line twice with rejection and pullback last week on a daily chart, as well as our U.S. trading hour chart. You can see here in the upper right-hand corner hitting that 181.41, slight difference there just for the trading hours. And as you can see down here at the bottom on the diamonds here, we are now in a price momentum that has turned downside on really nice volume. But as in all four indices, we've had a lot of under par volume, as you can see here on U.S. trading hours. Really some maybe once in a while significant days, but for the most part, since the back in February, we've been holding underneath the 60-period moving average. And a lot of chop action up here at the tops, drawn with our Fibonacci. So first thing, just looking at the macro view on both the daily and the 24-hour, we hit a Fibonacci key level, Fibonacci target number 1, 181.32 on the 24-hour and 181.41. And if we look at the weekly, we got some room still upside, 188.62, support down at 156.36, and as well as on the monthly chart, here we could see still got some room up, still upside. Let's go ahead and take a look at 185.09 being the upside target, and 167.81 here at the bottom as supports to the downside. Taking a look at more of the short term here on the diamonds, we have a 100-tick range chart. We can see here on our T3 moving average, the 5 has now crossed the 34 with a significant trend downside. The 80-period moving average down here in the below in the turquoise. So for the short term, obviously with price and momentum turning downside, and a 100-tick range chart showing the short trend to the downside, we also take a look here on our Heikin-Ashi bars. We could see that we have 3 significant bars coming downside. Both of these charts the same thing. This just one without the Heikin-Ashi bars. Here you can see the solid bodies tails down, which shows some indicating some selling. So again, the week to come, questionable week. Do we go chase that open gap that we have all the way down below on the futures, or do we hold up some support here and end up breaking that Fibonacci target? Obviously, we have room to still go to the upside, as this is just a slight pullback. As we'll take a look at some of the long term, we've just been in an uptrend for quite some time here. Jumping over to just some of the other ETFs that could be traded on the Dow. Here we have the DDM up in the upper left-hand corner. Again, same picture. A couple more Heikin-Ashi bars to the downside. No particular Fibonacci setup. As you'll see, many of my charts have some Fibonacci setups for trade management. However, here we do have a 5 crossing the 34. That's our white crossing the yellow. The T3 is showing a downwards trend, and we are also crossing underneath the 80. So DDM possibly to the long term. Here we have UDPIX. UDPIX, as we can see, we've been just chopping sideways. Fibonacci target, actually multiple targets on the longer range versus the shorter range. If we go back some time, all the way back here to October in 2014, and we drew our Fibonacci target. Again, the Fibonacci, not necessarily a trade entry, but this is where we can easily manage the trade by targets. As you will see many of my charts, 85% probability of hitting Fib target number 1. So you got point A down here, point B, price action comes back down, crosses right here. So a more conservative entry would have been right here on this bar on 12/18/2014 as it hit Fib target number 1, has just been bouncing this whole entire time underneath. The earlier entry, especially based on our intraday entries, would have been simply right back here, the 534 crossover. You had an uptrend on the T3 moving average and holding above the 80 period moving average. So much earlier entry, but at least knowing that the target up here was going to offer some resistance, and that could have been a point of exiting out of the trade. Again, we have another setup here. We had a 534 crossover, and so for the short term here, 64.56 on UDPIX. Down here is support. We break that, we continue lower, but a Fib target up above 68.8. If we can break that, 67.09. So we'll be watching that. Here we have on the dog, the DOG. We can see it's all been downtrend, and a Fibonacci setup way back in 2012 almost. That has brought us all the way down to 261.8%. So when we say, are we at the bottom? What exactly is support and resistance? A lot of times a full move is 261.8%, which on the dog here down here at 23.17. And on the DXD, you can see here we also have a very long-term move. No Fibonacci setup, but really nice entry. And again, if this is a strategy you can use on any chart, any time frame. I use tick range charts, but these can be used on minute charts, daily charts, whether it's Forex or futures or stocks. Here we're finding that on the ETF. We could see the entry would have been all the way back up here in 2012, 11.27. As you can see, price action has been holding 5 underneath the 34 on a 100 tick range chart. So really nice setup there. All right, let's jump right over to the futures, the YM, as we can see, very similar to the picture as we just looked at on the diamonds. Support up here at 18,100, which has been rejected twice up here. And here again, this is the 24-hour chart in the upper left and upper right-hand corner, 18,106, finding some support there. Let's go resistance to the upside. So let's go ahead and maximize that. As we can see, price and momentum also very similar as we have on the diamonds coming to the downside. Price action, price momentum turning downside. Again, the same picture on volume. And there it is, the Fibonacci draw right up to the tops here, 18,106. And so there is a key line in the sand for our Fibonacci target. When I wrote the article back in March 6, I was looking at right prior to us looking at price action had to either come back upside to break this target to go even higher, or else we were going to find ourselves in slight downtrend. And the concern was over the open gap that we have all the way down here at around 17. What is this around here? 17,200. So actually, just get the close of that bar, 17,295. So that would be our open gap all the way down below. Taking a look at the weekly chart, we could see that we have some room to go upside, 19,717. That would be the full move on the weekly. And then the monthly target a little bit closer, 18,501, where we found a lot of support down here on the YM for some time on some of our other indices, unable to break upside, but eventually all the markets have been able to push forward. All right, let's so major outlook here again. Right now, the short-term trend is obviously to the downside. Price momentum has turned somewhat to the south. Any momentum move will break up above Fibonacci targets 18,100, 18,106, 24-hour daily, and we'd love to see on the longer-term range chart, 100-tick range chart, would love to see the Heikin Ashi bars turn back upside, as we could see up here on this middle chart right here, solid body tail up. So for anything to continue upside, again, a break above the Fibonacci target, and for price action to break 5 back up above the 34. T3 moving average to show a trend change. And with a trend change, then we can look for the run up above the Fibonacci target number 1, and we can have our target set upside as we move up for the next level, 19,242 on a daily, both here and on a 24-hour chart and a daily chart at 19,250. So those would be the longer term targets, but actually the closer one being 18,501. I tend to look for the nearest target that I have on one of them being either the daily, the weekly, or the monthly. At this point, the monthly being the closer target, 18,501, is most likely possible at this point. But again, I need on the 100-tick range chart to show a change back to the upside on the Heikin Ashi bars, a cross over the 5 over the 34, and for the T3 trend moving bar. Now, this is great for longer term traders, for the intraday traders, or I should say investors, swing traders, but for the intraday, we apply this as looking for the intraday move. At this point, if we are to continue upside, we'll look for exactly the same setup. And to remain in the trend, we'd want to see some Heikin Ashi bars pulling upside, 534 action to the upside, staying above the 80 period moving average. On a much smaller time frame, taking a look at a 10-tick range chart. Intraday trading, always ready to trade in both directions. All right, let's go to some individual stocks, see where things are holding up here on the Dow 30. Let's start with American Express. You can see the Fibonacci setup was back here. Again, Fibonacci is just a way of trade management, see where price holds. But the entry is a simple strategy. We've in the past used the crossover on an 8-period moving average, holding above key moving averages, using the Heikin Ashi bars to keep us in trade and manage our stop. Here's a American Express. You can see had the entry all the way back here, back in the beginning of January. As you hit one fib target after another, you could see the hold up here. Obviously, you could see that American Express has been on a downtrend. Anything that would turn back upside would obviously be the 5 crossing 34 to the upside, and Heikin Ashi bar solid body tails up. So as far as American Express now, several opportunities for re-entry. As you can see, solid body right here back in February 12th. You had another opportunity right here on March 4th, another opportunity right here on March 25th, and just 3 days ago on a couple days ago, April 17th. Actually, this would have been last Friday, 3 bars down on the 100-tick after that major sell-off. So you would have had an entry right here as you had 3 bars to the downside. So American Express to the south. Here we have Boeing, taking a look at the entry back here all the way back in the beginning of January of 2015, as we've had a major run-up right there to the tops. 261.8 is considered a full move. A couple re-entry points along the way, but 5 above 34, several re-entry opportunities. This is great for swing traders to simply go from a 10-tick range chart to a 100-tick range chart for the swing trade, 10-tick for the intraday. And as you can see, anything downside, 5 crossing the 34, solid body tail down. Stronger trend down here. Coming back upside, you didn't get much. You might have been stopped out down here, and then the re-entry back to the downside. As we can see here, we're already back from last week's sell-off. 5 cross the 34. So the stronger move will be when 5 comes back. The 534 all tucks under the 80 period moving average. The T3 right now, the T3 going from green uptrend to red, and we could see solid Heikin-Ashi bars, tails down. So Boeing slightly to the downside. As we could see, Caterpillar has been on a downtrend as our American Express set up back in December of 2014. Again, several re-entry opportunities along the way. 5 crossing the 34. Solid Heikin-Ashi bars, solid bodies, tails down, and right now we're just slightly at the chop. No Fibonacci set up to the upside, but as we can see already, we had a 534 cross back here on April 9th. Solid body tail up, put you in the trade to the upside. Slight sell-off with last week, but again, 534 downside, depending on if you're on the swing trade, would your stop would be all the way back here at the break entry. So still a little bit of room at this point to hold off and see where price action will go on Calibil with the rest of the Dow. Here we have Cisco, as we can see price action on a long-term Fibonacci hold up, set up right here. The late entry back in October, early entry would have been last year, back somewhere around February. As we can see, hitting major fib lines right here. So we hit fib line number 1 with an 85% probability. With the fib line number 2, 1 to about half a month here, holding up here at the 28.36, and right now, boom, fib target number 3, and came back down. Still 5 holding above the 34, so very strong trend, but slight downtrend at this point. Again, you can match these, you can utilize these for the swing trader. You're obviously going to hold a little bit longer, but for the swing trader or for the intraday trader, looking at the longer macro pick, seeing an opportunity by saying, all right, when do I take the short? Well, I already see a change on my longer term 100 tick range chart. Then I can head, I can take a short on this before I take a long again. Looking at Chevron here, we can see the Fibonacci setup. Fib target number 1 hit here back in March 30th. Solid body tail up, rejection, comes back in. Up to the, I wouldn't take anything until the breakout here, which would have been right here back in April. Price action came down again, re-entry, and there we are, fib target number 2, 110.73. So really nice, smooth Fibonacci target. Not a lot of chop on a 100-tick range chart here. Again, the first entry was all the way back here, back in March 18th. But again, you got a lot of chop sideways. So a couple places to get in and out, but for the longer term holder, your entry would have been back here at the end of March, and you'd still be in this trade all the way up to 110.73. So great entry. Looking here at DuPont. DuPont, again, the entry back here last year in October. Fibonacci setup put you all the way to the final target here up at 80.4 for the long-term holder. But what we've had is some significant drop here as price action right here back on March 17th would have put you an entry to the short with a Fibonacci setup. Take the A point, B point, and retrace. And we are sitting right here at a support from the drive up. But if we're looking down, we're looking at 50%, 67.80. If the market is to continue downside, or at least DuPont, 67.80 would be having an 85% probability. If we break back upside to the stop above, 72.86, looking for the 534 to cross back upside. Trend bars have been moving upside, so key area to watch here on DuPont. Looking at Disney, what a ride it's going. Pull out that Star Wars trailer, and you got yourself a nice rise in the market all the way back from, that's right, this thing has been going ever since down here on the crossover. But more recently, we have a nice clean new setup on the Fibonacci's. Your first entry, the most earliest entry, obviously would have been on the solid body tail up here on the 534 cross, a retrace here, and just chopping sideways. So for the swing trader, several opportunities to get back in. For the intraday trader, matching up your intraday. So right now, the entry to the downside has a slight more advantage with solid body tail down. But again, looking at the longer term, Disney holding upside here with a high side target of 111.14 as your 85% probability there. Take a look at GE. GE, one of our dogs of the Dow stocks. We can see here entry at 25.18 from the beginning of the year. Has been doing well. Upside up here at 27.25. Fibonacci setup. Hitting fib targets along the way. A little slight hold up here at 26.82. But it continues to move upside. Several re-entry opportunities on 534 crossovers with solid bodies, tails up. So there's our dog of the Dow, number 1. Here we have Goldman Sachs. Goldman Sachs with an entry back here in this most recent, back here in beginning of April, with a pullback, and right there entry on April 6th. Hits Fibonacci target number 1. Solid bodies, tails up, and has been green trend all along the way on the T3 with a crossover back downside. Finding support right now here at one of the former Fibonacci levels. Any re-entry back to the upside for a full-size target at 204 would be a solid body tail up and a crossover over the T3 moving average, which is showing a downtrend at this point. Take a look at the Home Depot. The Home Depot had a crossover up here. Support was down here, 96.99. Entry back here and around in December. Middle of December. Earliest entry would have been back here in November. Chop along the Fibonacci target number 1. Made its way to Fibonacci target number 2. As we could see here, bouncing and chopping, and then pretty much staying within this channel here. Tough call on the Home Depot. Home Depot finding support here to the 111.84. Back upside, I would wait for the breakout. And solid body tail up on a 534 cross. Solid hike in Ashi bars. 121.01 being the next level upside. Here we're looking at IBM. IBM just challenging, really having a tough time, as you can see here, just chop coming down, coming right back up. As we can see, the early entry back here on IBM, the most recent back in March 18 when we had this nice drive up, coming back down. So for the intraday trader, nice opportunities to get back in and out, but nothing of most recently until this former drop as of last week. Gave you an opportunity to get into the downside on the 534 crossover. 164.4, you can see Fibonacci target right here, rejection, 85% probability of hitting that target. Your stop would have been down here at 158.39, so really nice entry, got your target. Intel, moving on, here we see Intel Fibonacci setup from back in January, hitting fib targets along the way right there, holds up at 261.8, full move, and has come all the way back down to 127. Again, a nice drive down, slight Fibonacci targets to the downside. You can draw an A from up here, a B with a withdrawal, and C hitting Fibonacci targets right there, 29.46. And bouncing back upside. So the trend right now, slight change as we could see on the Intel. See the Intel here, solid body tail up. And continues. Tough one to make a call now, as we've been seeing a chop to the side a little bit here, but can go in either direction, obviously, as any other stock can do. But right now the trend is still holding to the downside. Taking a look here at Johnson & Johnson, J&J, as we can see, also same trend direction, held up at Fibonacci target number 1 over here, made it to Fib target number 2. Several re-entry points, nothing clean back here in February, slightly longer here in March. Nothing I would touch on Johnson & Johnson. Again, we have a Fib target showing to the downside. Break outside, break down below. If the Dow continues downside, 98 under 98.51, 96.08 would be the next target. So Johnson & Johnson looking to the south there. JPM as it makes its way upside here, already hit fib target number 1, solid body, held up well last week. JP Morgan, again, early entry back here in February. Fib target entry right here at April 6th would have put you right to the fib target at 63.17. Upper target would be 67.47. Once you hit that, move your stop to 63.17. Taking a look at Coca-Cola, our second dog of the Dow. Entry was at 42.15, not doing so well. Early entry on Coca-Cola back here in 2012. As you can see, the 534 cross fib setup has just marked its way all the way up to 100%, but nothing clean like we've seen on some of our other Dow stocks. Tough call on this, but the intraday might offer some entries to the downside. Here we could see on the 100-tick longer range chart, again, a 534 cross to the downside. Solid body tail down led for some significant selling to a recent support fib target, 50% down at 38,989. So Coca-Cola, something to watch so far to the south. McDonald's, you can see, has been struggling here. No Fibonacci setup, just a retracement at this point. We have a low on the 534 cross, so McDonald's got you a nice entry back here in February all the way up to 101.06, sitting now here at 94.88 at a 50% retrace here. So again, the short-term trend here is now to the downside, 534 cross, and showing a T3 moving average to the downside. So somebody watch McDonald's. If you're waiting for it to come back into the upside, wait for that solid body tail up, and then what you do is you have yourself a Fibonacci entry. So you draw yourself a Fibonacci extension, take the lowest low to the highest high. If this is our lowest point and this were to turn here, our target up here would be 100.45 for the Mickey D's. Maybe that breakfast all day will get them up there. Taking a look at Triple M. Triple M, just nothing clean. Long-term fib target back here from 2014 in October. Solid bodies, tails up, and just chopping along the way. Nothing I would have been interested in being in. And of course, for the short term right now, drawing a Fibonacci line, we've had a retrace here up to 61.8. So obviously a price action had continued to break upside from that. I would have said a trend turnaround, but price has really held up here around this 167.72, and as you can see, solid bodies, tails down, Fibonacci 534 crossover, and so for your first target has already been hit here, 163.3. The next downside target 158.88 on the Triple M. Take a look at Merck here. We had a solid entry on a fib target back here in 2014. She's done a lot of chop here. So really the short term, and again, hit that 261.8 and turned around. So the short term right here, as we could see, solid body tail down right here. We had the trend already start right here. That would have been my entry right there on March 26th to the south. Finding support at the most recent 161.8. Hasn't broken that yet. First fib target, 85% probability on the Merck to hit 55.67. As long as if that continues downside. Again, similar picture on Microsoft. Entry back here in 2014, hit Fibonacci targets along the way, got up to that 161.8, unable to hold up there. So the short-term turnaround here is solid Fibonacci setup from up here, crossing the 534 with a retrace. There it hit 40.88. Stop is here 44.3. You would move it your stop to break entry right here on the solid body tail down, coming pretty close there. So just a little bit of room. If this thing continues downside, T3 moving average starting to show an uptrend. So watch your Microsoft if that turns around. All right, looking at a longer term here, back from 2014 on the Nike. Nike, again, solid entry back here as just pushed up to levels there. It was the reject at the full move, 261.8. Again, you had a nice entry here on the 534, as you did on some of the other entries. There it is, the 534 cross back in October, which would have just kept you in. Several opportunities to re-enter, and so where do we sit right now? Nike with a nice Fibonacci target to the upside. Crossover, 534 right here on the entry on February 20th. Hit fib target 1. Boom, right there, 103.43. What does it do? It rejects and it comes back down. So you're getting a 534 crossover, the Dow leaning to the south a little bit from last week, finding support here at the 80-period moving average. So watch your Nike. Again, if I'm going back upside, 103.43, solid body tail up on a 534 cross. Taking a look at Pfizer. Pfizer, another one of dogs of our Dow, second lowest rank, PPP. That makes it, if you were just to invest in the one of the Dows, the second lowest rank, that would have been this Pfizer, which would have been doing really well. 31.40 was the entry, sitting now at 35.40. There's your long-term, held up at 161.8. and now re-entry. If you had missed the initial one on a Fibonacci, here you go. You have the entry here. What was this, about September, and then price action continuing to the upside here as it already hit fib target number 1 and 33.40 and making its way up here to fib target number 2. All right, so taking a closer look here at Pfizer, as we can see price action working its way up to 36.22. Early entry was back here on the 534 cross back in November. If you wanted to wait for the Fibonacci setup, here would be in your setup back in January, hitting fib target number 1. Price action bouncing down a little bit and then breaking to the upside. T3 holding upside in the trend. No reason to come out of that. Your next target again, 36.22 on the Pfizer. Taking a look at P&G, Procter & Gamble's, we could see the upside entry back here. This was back in 2014 in August. Put you in the entry right here, fib target 1, 2 held up for a little bit, fib target 3, not being able to break upside. You can see the entry on the fib to the downside, 534 cross, hitting fib target number 1, and right now holding a little bit of support at what was the first initial stop here. Taking a look at a closer action, you can see already the 5 solid body tail down right here on the Heiken Ashi together with the market on last Friday. If you're headed to the south here on the P&G Procter & Gamble, you're looking at a target here down at 78.67. Take a look here at AT&T, another dog of the Dow here, as we can see the setup hitting fib target number 1 not only once but twice. Chopping it up sideways, breaking that target line, that initial retrace C breaks that Fibonacci setup. So the next and most recent setup to the south. Here, as we can see, AT&T unfortunately has turned to the south. Being a dog of the Dow, you would hope that it would go north there, but the 534 cross back here in October has continued downside. Several re-entry opportunities back here in December, and right now as late as March 6th. Solid bodies tails down. Again, these are 100-tick range charts. You can use these on daily charts. You can use them on hourly charts. It's your preference and choice. As we come in to wrap up some of the last Dow stocks here, again, we have a nice entry all the way back from February 2014 that would have kept you in solid body tail up right to the 261.8. Bouncing, chopping up a little bit. Here was a re-entry. Again, you would have had another entry right here back in October 20th on a 534 cross. You saw the pullback and the reentry gave you a fib target upside right there. 85% probability hit 109.76. And so a couple opportunities for fib setups. Again, the initial draw I did here was to the initial pullback. And then my second draw from the same point here, but coming a little bit further down the line with about a 38% retrace here. Or was it about 23? We can take a look at that. That's all right. So, excuse me. So here we see the 50% target hit at 109.76 rejection, and now we see the solid bodies tails down. I was going to draw a retrace for you guys here. Let's see how far that was. Go ahead, point A. There's our fib retrace. Just about 38%. So, but for the short term here now, Travelers is to the downside. Solid body tail down there on the 534 cross. And so once we have a Fibonacci draw on that with a proper retrace, would be from point A up here. Actually, I didn't draw that, so let's go ahead and draw that in. So point A, we got a point A here. Let's use point B here for the retrace. I come up here. Actually, we'll come over here. Actually, I have a wrong draw there. I apologize, traders. That would actually be from up here to the retrace, and that did. So really not a clean setup. If I really have to try to find the setup, then I don't see it. So just entering on the solid body, tail down on the Heiken Ashi and the 534 cross gets you some points to the downside. So not a bad entry. Moving along here, taking a look at Unitedhealth as we saw the entry back here in 2015, or October 2014, as the market started to run up here. A nice early entry would have kept you in on just a 534 cross, and then chopping it upside. And where did we end up? 127%. So not bad, just from about 6 months ago, from 86 all the way up to 122. And Fibonacci targets right there back in February had a held up right at the 100%, and holding up here at 127%. If we break upside to 122.04, we'd be looking at 129.24 as the next step up. But what do we need? We need this kind of price action right here. Solid bodies, tails up, and pushing back upside with a breakout above 122.04. United Tech over here, only setup that we have at this point. You can see the earlier setup back again from October would have kept you in all this way. Unfortunately, to the downside right now, as we held right to the target here, 115.08 on Unitedhealth. Moving your stop to 119.39. Anything's to break back upside. Solid body tail up, 534 cross. So looking next downside target, 113.13. Take a look at the Visa. Here we had our first initial entry back here. Wonderful entry in the 530 cross as it moved upside. Visa is now unable to reach its first Fibonacci target up here, which was 70.56. But again, on the 534 cross would have given you some nice points to the upside. Oh, well, Visa decided not to go higher and has decided to continue to come down. And as we can see here on our fib setup, multiple targets to the downside, 63.21 being the next target. It did hit the 50% and has held up at 65.71 for several 100-tick range counts. Here we see it. And then back to the downside, solid body tail down. If this were to continue here, 63.21 to the south. Verizon, one of our dogs of the Dow, which is holding upside. Entry was back at 47.03 from the beginning of the year. As we could see, price action on a retrace. Holding upside right there, fib target number 1, 85% probability. Not much room to get to the upside. So actually your early entry here back in February on a solid body tail up, 534 cross, and a T3 to the upside, T3 moving average. And as you can see here, price action still holding upside. Any breakout above 49.66, next target will be 51.97. Again, holding up as one of our dogs of the Dow, 47.03. Taking a look at the Walmart, not such a pretty picture. As we can see, has really turned around to the downside, hitting one fib target after another, 161.8. And as Walmart makes its way down, 75.11, next target downside. Possible re-entry. Well, your first initial entry back up here on the crossover, re-entry over here back on January 28th, re-entry back here. Back in February 9th, all you're looking for is for the 5-period moving average to come back downside over the T3 moving average. Your 5 has been under 34, and now a very strong trend to the downside. 5 under 34 under the 80-period moving average. So Walmart not looking anything bright to the upside yet. 75.11 would be a full move on the Fibonacci levels. And Exxon with multiple targets to the downside, as we could see. We had back in a setup back around, when was this? September, somewhere around September. Actually, it goes back a little further back, somewhere around August. First Fibonacci setup. Went ahead and drew some additional Fibonacci lines, as we could see. Eventually hit fib target number 1 here, and another setup. Our most recent setup, as Exxon is trying to make a challenge back to the upside, but here is our most current Fibonacci level, and we're just doing the wave here. So even though we have Fibonacci setups, as you've seen in some of our other Dow 30 stocks, nothing is clean here, but we obviously see our most recent fib setup. Let's go ahead and get rid of some. Well, you can see right here, fib setup was hit the 50% line, made its way to the 100%. 127, and right here 161.8 back on March 13th. As you can see, price action has bounced back upside. So oil stocks coming back up, which you can find in one of my other reviews as we review the oil stocks. Bought at the highs and the lows, ready for a price pullback. But we will Take a look at that later. Let's wrap up the Dow 30 stocks here. As we can see, the ExxonMobil solid body tail up, 534 cross. So I wouldn't rely on the Fibonacci setups at this point. I would rely on simply momentum move. Wait for that price action to continue upside. As long as the oil stock's there, Exxon hopefully move back upside. Solid bodies tails up, indicating strong buying. Perhaps waiting for the breakout right here. Double resistance around 88.35. Again, ExxonMobil has been in pretty much a downtrend for the most part. So if you weren't really looking for the breakout, 92.78 and above, 92.78 and above, but you do have the early entry here right there. Solid body tail up, 414. You put your stop down here at the most recent swing size low. You can come down in as low. Down here is around 82.67, or you could take the most recent swing size low, the Heikin-Ashi bar at 83.82. And that concludes our Dow 30 wrap up. Again, just to look at, we got some major significant lines to the upside, but 18.105 there on the, let's take a look at the YM again, the YM being that significant level up there. Let me get the right chart here. There we go. 18.501 is the major line on the YM futures. As long as, again, we got a mixed bag on our Dow 30 stocks, but using a combination of Fibonacci targets and using 534 crosses, T3 moving average, and as usual, Heikin-Ashi bars to keep you in the trend. That concludes today's in-depth analysis of the Dow. Good trading is always going back over your trading day, macro pick, reviewing trades, reviewing setups that work out, what keep you in, perhaps took you out too early. My mantra is to know one thing and know well, rings true for all markets. My strategy of Heikin-Ashi bars and moving averages works well on intraday, works well on swing trading, both for ETFs, Forex, whatever market, any chart, any time frame works well. It's your patience and discipline that will continue to grow as a trader when you implement these tools. This is David of Trading Fibs and MarketFi.com signing off. Have yourself a Blue Zone day.